With that, we'll go to the gentleman from New Mexico, Mr. Pearce.
Thank you, Mr. Chairman. So we began this process, Dr. Lockman, I'm probably going to come to you, but we began this process of quantitative easing, printing money, whatever you're going to call it. And now then it looks like we have initiated maybe that kind of an effect worldwide, that if it's good for us, everybody can do it. What are the downside effects of everybody beginning to create money out of thin air?
Well, I think the reason that everybody's got to do it is it does have impact on their currencies, that it cheapens certain currencies, puts countries at a disadvantage. They find themselves in the same position, so they go ahead with doing it. My view is that if all of us do this to a very large degree, and we've got global financial markets, the risk is that what you get is you get global bubbles, and that when you begin withdrawing from that policy, you're going to be paying a heavy price. I'm not saying that quantitative easing wasn't the right thing to do at the time that it was initiated, but I'm saying that now that the balance sheets are so large and it looks like there's froth in the markets, I think that there's got to be pause as to whether you just continue this indefinitely or do you start the process of unwinding.
But then when we started unwinding, you had one member of the Federal Reserve saying at one point the same day, we need to start tapering. Another member of the Federal Reserve shrieked that we can't start tapering. And so you get this mixed signal, and the markets are, a little bit volatile. What's going to happen, Dr. Orphanides, if we get dropped as the world's reserve currency? What will the effect of the quantitative easing be on the currency inside the United States?
I would put this in reverse. Of course, it would be catastrophic for the United States.
If I can just stop,
if the dollar loses the status of reserve currency,
and so it would be catastrophic.
This is one of the risks of continuously expanding the balance sheet of the Federal Reserve without having.
If I could reclaim my time, it would be catastrophic. I mean, you can look at Argentina. They don't have a currency. They can't export inflation like we do. We get to export to 200 basic other countries, and so we diminish the effects inside. And so Argentina a couple of years ago had 1,500% inflation rate, and so your statement that it would be catastrophic. So it really got my attention this year, or maybe it was late last year, that the BRIC nations said they're going to start trading in other currency, Brazil, Russia, India, and China, and then two of them actually did that. And so we're getting these warning signs from the rest of the world that you're creating some very unstable things with very catastrophic effects. And we've started a printing war, and nobody knows the way out. Any hope? So what stops it all? I mean, anyway, Dr. Macon, I'll just come to you next.
Sure.
Dr. Posen, I'll give you the last shot to wrap it up.
Okay. Well, if there'd be much more cause for urgent concern if we were seeing all this money printing and observing a big pickup in inflation. In fact, we're seeing the reverse, that inflation is actually slowing down. It's below 1% in Europe. It's about 1.2% in the U.S. And so you have a deflationary situation that was kind of akin to what was happening in the early 30s, and central banks tend to want to export deflation by printing money, causing their currencies to depreciate, which means other currencies appreciate. So we have to avoid a kind of overt currency war of that type, and at the same time try to get past a situation where everybody is using easy money to get a bigger piece of world trade. In other words, avoid a trade war, which is one of the things that made the Depression worse.
Thank you, Dr. Posen. I assume that was your saying you really didn't have a comment to make on this. I guess the final thing is, what does this look like to the American family? My dad raised 6 of us on $2.62, the entry level in the oil field. Today, what his dollar would buy, it takes $12 to buy. I think that's one of the reasons we're having such great stress in the American economy, is that the value of what people make is being diminished radically by policies that the government is setting. Would yield back, Mr. Chairman.